Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JS Global Life Interim Report. JS Global Lifestyle Company Limited offers a diverse range of businesses and services across various segments. These include design, manufacture, marketing, distribution, and export of small kitchen electrical appliances, cooking appliances, rice cookers, pressure cookers, induction cookers, air fryers, and more food preparation appliances, high-performance blenders, soy milk makers, food processors, and other small household appliances, cleaning appliances, upright vacuums, cordless and corded stick vacuums, and floor care products, other small household appliances, water purifiers, water heaters, thermos, hair dryer, and more. In addition to these product offerings, the company also provides various services such as enterprise management, advertising, consultancy, marketing, supply chain management, administrative and procurement support, housing leasing, research and development, manufacture and sale of water purification equipment, IT development, sale, installation, and maintenance of home appliance products, retail of home appliance products, e-commerce business. The significant increase in JS Global Lifestyle Company Limited's 1691 HK stock price by over 25% in the past year can be attributed to several factors. The company's strong annual results for 2024, which showed an 11.5% year-on-year revenue growth and a 4.8% rise in gross profit, likely fueled investor confidence. Additionally, a 38% share price bounce in early January 2025, before the release of the full annual report, indicates positive sentiment or operational improvements. Furthermore, analyst consensus of strong buy, with an average 12-month price target of 2.19 HKD, also supported the stock's appreciation. These factors collectively contributed to the company's stock price increase, making JS Global Lifestyle a notable performer in the market. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown significantly due to the successful launch of new products and categories, expansion into new markets and regions, leveraging consumer insights for product development and marketing, and delivering high-quality innovative products. Strong growth in both Shark vacuum products and Ninja kitchen appliances, along with market share gains in cordless vacuums across key APAC markets, have contributed to revenue growth. Revenue decline drivers. On the other hand, revenue decline is attributed to slower pace of growth in Japan's cordless stick vacuum category, moderating growth across ANZ strategic categories due to competitive reactions, softness in Chinese mainland market, and decreasing gross profit margin due to higher freight costs and shift in market mix. Net income and profit margins decline. The company's net income plummeted by 281.4% year-over-year, resulting in a significant loss of approximately $53.7 million. This drastic decline is reflected in the adjusted EBITDA and net profit, which decreased by 25.9% and 26.6%, respectively. Profit margins also suffered, with the gross profit margin decreasing by 1 percentage point to 32.1%. The overall profit margin dropped by 1.7 percentage points to 33.5%. Specifically, the Joyoung segment saw a decline from 32.1% to 29.5%, while the Shark Ninja APAC segment's profit margin decreased from 47.3% to 42.2%. The reasons behind these declines are not explicitly stated in the provided summary. However, it is clear that the company has experienced significant financial setbacks, with net income and profit margins taking a substantial hit. The company's financial performance indicates a strong ability to generate positive operating cash flow. The increase in cash and cash equivalents to $452 million by the end of June 2025 is a testament to this. Furthermore, the operating cash flow for 2025 was a significant $89,574, demonstrating the company's capacity to produce substantial cash from its core operations. This positive trend suggests that the company is financially stable and able to meet its obligations. The company's financial situation has undergone significant changes in terms of debt levels and interest expenses. In terms of debt level, the total borrowings have increased by a staggering 225.3% from $15 million to $48.8 million. This substantial increase is also reflected in the total bank facilities, which rose from $100 million to $148.8 million. The overall debt level has also seen an increase, with a notable rise of $33.8 million. However, despite this significant increase in debt levels, interest expenses have actually decreased. Specifically, they dropped from $1,525 in 2024 to $1,151 in 2025, indicating that the company is managing its increased debt burden effectively by securing more favorable interest rates or terms on its loans. The financial performance of various segments and regions within the company has been mixed. On a positive note, the SharkNinja APAC segment showed significant growth, with an 86.9% increase in revenue from third-party customers. The Joyoung segment in Chinese mainland also performed well. However, other segments and regions struggled. The Joyoung segment outside of Chinese mainland saw poor results, while the Joyoung segment as a whole experienced softness in certain product categories. Additionally, the APAC region's overall performance was moderate, with revenue and results that were lower than expected. Management is optimistic about the company's outlook, citing several key strategies to drive growth. The company aims to maintain its foothold in Japan by introducing new products and leveraging peak summer season demand. Globally, it plans to develop localized products, commercialize innovative ones, expand sales networks, and maximize synergies between Joyoung and SharkNinja APAC. Additionally, the company is pursuing strategic partnerships and opportunities to further drive growth. The company's financial summary reveals that it has a history of paying dividends to its shareholders. Specifically, the company paid out $5,116 in dividends for 2025 and $5,987 for 2024, as stated on page 49. This indicates that the company prioritizes returning value to its investors through dividend payments rather than share buybacks. Concerns over inventory buildup and supply chain disruption. The financial summary highlights a pressing concern for the company: inventory buildup. Specifically noted on page 24, this issue suggests that the organization is struggling to manage its stock levels effectively. This problem can have far-reaching consequences, including wasted resources, reduced efficiency, and potential supply chain disruptions. If left unaddressed, these issues could compromise the company's overall performance and competitiveness in the market. That concludes the financial summary for JS Global Life. Feel free to comment below, and I will be happy to answer them when possible.